Hello friends, welcome back to part 5 of my forecast video review series for Q4 2022. For Tesla earnings, we've gone through a bunch of pretty charts already. Let's get right back to the pretty charts after briefly checking in with Loki. You can see him blinking, keeping his eyes open a little bit there. Just resting, not napping. So here's where we left off with the chart showing how Tesla spends its average dollar of revenue. I realized in re-watching part 4 that I forgot to answer a common question I get on this chart, which is, hey, everything else excluding stock comp, why is that number getting bigger in your forecast into the future? Should we be concerned about what kind of expenses are in there? And the answer to that question is no. Don't be concerned about that. It was getting smaller because Tesla was ramping up to scale and becoming profitable. And it's getting bigger into the future because taxes are included in here. So the more profits you have, the larger these green bars get, the larger these gray bars are going to get because you have to pay tax. You have to pay income tax to the government on the earnings. So the amount of the earnings determines the amount of the tax, and that's what's causing the growth in this per dollar of revenue metric. The more pennies on every dollar that are profit, the more pennies on every dollar you have to pay as tax. All right, so that's that one. The next chart, not that. I hit the wrong button. Or I had the wrong window active. I hit the right button, but it does a different thing in the OBS Studio app where I record my videos. Okay. This next chart is showing Tesla non-GAAP earnings on a per delivery basis. So you take the earnings dollars and you divide that by the total number of deliveries. Now, is that the best metric we have? Yes. Is that a perfect way of doing it? No, because some of the earnings came from Tesla Energy product sales, right? But it would get very confusing if I tried to account for that somehow by like adding in the number of energy products sold. Well, all right, what's an energy product? Is that the number of houses where solar was installed? Is that the number of people who bought Megapack? Well, how many Megapacks did they buy, right? I've never even thought about it before. So the only useful volume metric you could use as a proxy for profit per unit of how busy your company was if you're Tesla is deliveries. So that's what I have here. It's not perfect. It's the best thing available, I think. And again, we're going to do this on a trailing 12-month basis because that's going to smooth out seasonality. So way back here at the end of Q4 2018 and Q1 of 2019, Tesla was losing money still. These little bars here are supposed to be red, and this is one of the things that Excel does that drives me crazy. They were red last quarter, and then somehow they've decided to change themselves back to green again. So the labels are right to make them red. These are negative numbers. You can see they're in parentheses here. So I missed that one, and it went into my forecast thread that way. I didn't hear anybody comment on it. But I know it's wrong. These are supposed to be red bars and not green bars down here. Okay. And then the labels above the bars are showing you positive numbers. Those are not in parentheses. So, you know, since mid-2019, Tesla has been consistently profitable. Now, way back here, the objection we were getting from people was, yeah, but without regulatory credits, they wouldn't have been profitable. And they had a point back here where it was only $23 of profit per vehicle. Well, yeah, the regulatory credit sales are more than $23 per vehicle worth of revenue and profit. So yeah, that was true at the time. But we were telling people, yeah, but look at the trend. Look at the direction. The revenue is growing. The earnings are growing. The operating margin is improving. Try to use your imagination just a little bit and forecast into the future and see that the day is coming when Tesla will be profitable even without regulatory credits. And people didn't want to hear it. They said, there's demand cliff coming, competition is coming, the growth story is over, Tesla will Tesla's overvalued. It'll never be worth more than it was in 2019. Well, we know what happened since. So I made an alternative version of this chart, which is the next chart we're going to see. It's exactly the same except excluding regulatory credits. Okay, let's just throw the regulatory credits out as though that's a valid thing to do in accounting. It's not. But the Tesla haters in Tesla Q, the short sellers, were already doing it. So, okay, fine, let's do that. And let's take a look at how it looks. Oh, well, it's still a positive number. So through the end of 2019, it was a negative number. But since then, all of 2020, 2021, and 2022, it's been a climbing positive number. Steady upwards growth here. So that the 12 trailing month Q3 2022 earnings per delivery, excluding regulatory credits, were 9,262. So if you can't get a feel for how good that is, and the one that includes regulatory credits is higher than that, 10,583, let's go check out a different tweet that I sent not that long ago, only 3 weeks ago. I tweeted, between Tesla, Ford, and GM, who's making the most profit per vehicle? The amounts may surprise you. And then I've queued this video up to the moment in that video where I'm showing GM profit per delivery was only $3,000. And Tesla profit per delivery was $9,761. Now, why is that not exactly the same number that we just saw on this PowerPoint chart? Because this one is trailing 12-month basis. And this one, just for ease of calculating, was year-to-date Q3 2022. That's what it says here, year-to-date Q3 2022 earnings comparison, because that's how the companies report. They don't report trailing 12-month all the time. Let me hit play on this. Numbers you'll see reported by any company that sells automobiles globally. So that's GM and that's Tesla. I did tack on one more after Ford reported their earnings. You can see I tweeted this October 25th. Ford hadn't reported yet, and then they did, so I added them. So if I go down the page, that's all I was trying to get to. Sorry for the meta experience of watching me in a video, but let me drag this up the page some so you can see the table. There it is. Sorry, I didn't have it framed up exactly right. So Ford lost money year-to-date Q3. Now that's because they had taken a huge Rivian gain the year before, and this year they took a huge Rivian loss. So if you were to look at those 2 years combined, those would cross-cancel each other. I think it was about a $9 billion gain one year and then a loss the next. But yeah, that's what accounts for this negative $9 billion. So basically, if you threw that out, they would be making no money at all per delivery. That's where Ford is. So is $9,000 per vehicle good? Yeah, this is world-class profitability, you know, and I think that's a number that makes sense to people, which is kind of why I made this chart in the first place. Man on the street would appreciate that there's $10,000 per vehicle sold worth of profit, right? That's pretty good. And I think most people grasp that pretty quickly, as opposed to other more arcane metrics. Try to convince somebody that a 40% ROIC is impressive. If they're not already into financial analysis, right? They probably won't care. But those are the charts that I wanted to cover in this video. Tesla non-GAAP earnings per delivery, whether you include the regulatory credits or exclude the regulatory credits, Tesla is still making a bunch of money, and we're still seeing this FUD from people, even though Tesla has long since become profitable without the regulatory credits. So if you see that FUD, you have my permission to shoot it down on Twitter with the facts appropriately and politely. Alright, so there's Loki, and let me outro and say if you've enjoyed today's video, part 5, click the like button. And if you're not subscribed to my channel, go ahead and subscribe to my channel and click the alert notification bell so you get notified when I post fresh content. Thank you to everyone who supports me on Patreon or by joining my YouTube channel, especially Kathy Kitchler and Halter Ferguson Financial, my executive producers. And I will see you in the next one.